Yo, 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 what's up, everybody? It's Stocks and Stoves with Dad. And I brought you another one because there's always going to be another one. It's been a really, really busy end of the year, January. Been a very busy, fluctuating up and down market, February. And we're like in what, week two, going on week three soon. Today is Monday, February the 9th, obviously. And I just want to catch up with you guys and give you a little update of what's been going on. So obviously, I got recurrent investments for the Schwab and SoFi, and that's SCHG weekly. Every Tuesday, I'm making small increments on those two. Of course, with SoFi, there's been a lot of big changes. They had earnings, I believe. SoFi is a stock I believe in. I'll continue to invest in it. It's more than just a banking system. They rolled out their crypto platform. They're doing stocks. They're doing a whole lot of stuff. College loans, tuition loans, mortgages. It's just it's just part of the future, and I've invested into it. J.P. Morgan, yeah, I know that's part of my. Let me make it easier. These are just notification updates. So I'll just go through them real quick, starting at the bottom. Apple, I bought a whole share of Apple recently. I purchased VXUS, which is an international stock ETF that's part of my Roth IRA. I finally got into Netflix. I purchased 5 shares of Netflix. What else? JP Morgan, that's another ETF. JEPI, which is also part of my Roth IRA. Right now, we're sitting at $16,318.48, only because my crypto portfolio has been like ridiculously trash. Look, a couple minutes ago, it was like sitting at 14. Now it's at 1383.07. As you know, crypto is very volatile. Year to date, look, $582, 29%. But I'm not worried about that. As fast as crypto go down, it really could skyrocket back up at any given moment, any point of time. It's just very volatile. The powers that be, they know how to manipulate crypto. So I don't even care to share my crypto portfolio, but I got some Solana staking. I got some Ethereum staking. My biggest hit right now is XRP, negative $495. Currently sitting at a value of $717 at an average cost of $2.42, and is currently at a cost of $1 and 1.43 cents. So it's really bad right now, but it's actually an opportunity for me to either dollar cost average into it or just sit on the sidelines and not worry about it. Either way it goes, I'm not messing with the crypto too much right now. I'm just showing you. This is the main reason why my portfolio looks like this, at least this portfolio. But let's get back to my stocks. So obviously, this total amount at the top you see here, the $14,627.41 and counting, is a total of my stock portfolio and my crypto portfolio. Now, the crypto is the portion that is bleeding my account, but it's not necessarily bleeding it. Crypto is going to do what crypto is going to do. So we're going to skip that and let's get into like my stocks. It's pretty much leveled out here. As you can see, Apple sitting at $273.27. Year to date, I'm up 19%. I mean, no, I'm not. I'm up 0.37% year to date. That's $1.02 for the year, 19%. For 5 years, 100%. So that portfolio is still doing what it's supposed to do. I got a dividend payment coming up in February the 12th for $4.38. My total position is plus 72.02%. That's $1,927, $1,927.16. Today I lost negative 1.63%, which is equivalent to $76.28. No harm, no foul. As Apple is going to do what it do. As you can see, total return plus 72. So I'm going to stick with it. Amazon, same situation. Currently sitting at $208.98. Year to date, let me see what we're looking at. Year to date, down 9.67%. That's a total of negative $22.36. For the year, 9.35%. 5 years, 24.43% positive max. Look at the max, 6,821.74%, positive $205.98. Can't complain about that. At an average cost of $129.99. Total return, positive 60%. I just showed you Apple, total return, positive 70%. Today is down 0.66%, which is $23.06, which is great. No complaints there, because I'll continue to buy Apple and Amazon. Let me see if I did the max over here with you guys so you can see. Look at that max percentage, 30,207.63%. There's nothing to complain there. That's a long-term play. I'm going to continue to buy. So far, I got 60 shares. I told you guys I'm going to be building that out because I like the stock. I'm currently sitting at $21.40. Year to date, let me see what we're looking at. Year to date, 19.73%. So it's still buying opportunity here. Keep on buying the dips. For the 1 year, 42.38% positive. For the 5 years, 8.55%. That's, wow, $2. And max, I'm at 94.55% positive. No complaints. I'm not complaining with that. Currently, total return, 31%, equivalent $306.28. Today, I'm up 2.59%. So that's $32.47. I will continue to buy this. Same with SCHG. I haven't been holding this position too long, but it's sitting at $31.46. Year to date, down 4.4%. For the year, up 10%. Max, 902%. I'm not going to complain about that. Currently holding 20 shares at an average cost of $30.56. Currently sitting at 31.46. Total return, 2.96%. $18.64. And I get dividends on this, and I do weekly buys on this as well. Energy Transfer. This is one of my babies. I'm not going to complain about this one. Let's just go to the max, see where we at, 213%. For the 5 years, 164% positive. For the year, 11.63% past year. Year to date, 9.75% at an average cost of $11.75. Currently holding 173 shares. Total return, positive 53%. $1,093.99. Today I made $19.64. I'm currently going to get a dividend February 19th for $58.17. I'm not going to complain. Now, Netflix, I'm going to skip. Let me put this one below. I'm going to skip that one because that's a gamble play. Netflix, I just got in. I got in around a dip. I could have waited for the dip more, but I got at $82.50. I got 5 shares. Those are my very first shares, 5 shares I got. Currently sitting at $406 market value. Total return, negative $6.30. That's negative 1.53%. So obviously, let me see where I caught it. Let me see. Nah, it did. It did like right after. See, I bought it around here somewhere, 82. And it was sitting at the time higher than 82. And I thought I got it at a good dip. I think I got it right here, somewhere around here. Like right here, 82, right before this dip. Had I waited a little bit longer, I kind of got it at $80. But it's cool. This is slow grinding out play. I believe in Netflix. We all know what Netflix is and what Netflix has done and is continuing to expand outside of the US, international, hitting those markets. So there's still room for it to grow. Netflix has also gotten to gaming, its own gaming content. It's also gotten to sports, it's streaming sports such as boxing and different events like that. So they're still finding ways to expand. And they're probably going to have a price increase soon. Obviously, they did a stock split, so there's a lot of things changing, but the company and its fundamentals are still the same. Great company, and I believe they're one of the leading streaming services. No matter what kind of controversy they go through, I use Netflix more than I use Amazon Prime, Hulu, or whatever other apps that's out there, Disney Plus, or whatever. So, and we're gonna leave that at that. And BITF, this is Bitfarms. It's a mining company, crypto related, but it's not crypto. It's the companies that mines the cryptos and build the chips and the computers and all that cool stuff. And this was I got in, I thought I had a good time, but I didn't. And it's okay because I know it's going to rise. Let's see what it says. Bitfarm rises 6% from Friday close on AI pivot. And okay. Okay, that's right. Bitfarms is now leaving from just being a mining company. They're also now investing into AI. They're creating the chips and all of the good stuff that keep the AI machines going. So they're pivoting from being just a mining company, which is why they increased from last week, Friday, 6%. So it was actually like $1 and some change. It's currently sitting at $2.28. So I'm getting some of my money back slowly but surely. But this is a play that I'm going to hold for like maybe a year or so. I probably had it for like 3 months or something like that. And then I'm going to sell it out when I'm in profit. And that's that. That's currently the portfolio. You see how it's going. It's bleeding right now. But you know we ain't tripping. When there's blood in the water, that's when the sharks come out. We gonna come out and eat. We gonna buy some shares. We gonna do what we gonna do. Now let's go to this account, my Roth IRA, 3 month old account, something like that. Slowly but surely building it out, and it's actually I'm building this one now totally different from my previous account because I learned so much over the years, over last year, and this particular portfolio. It's a well-balanced portfolio into the SPYM, S&P 500, obviously. Then we got SCHD. You've seen what's been going on with SCHD lately. Currently at an average cost of $27.49. I got 12 shares, almost 13. And today is sitting at $31.47 positive 14%. I'm good with that. That's plus $50.74 without doing nothing. SPYM. I'm feeling this one too. Currently sitting at positive 3.90%, $15. I got 5 shares and slowly building. This is a new portfolio, new position. It's only 25% of my portfolio at an average cost of $78.56, and it's currently sitting at $81.62. And the good thing about this portfolio, every stock I got on here or every ETF, they all pay. They're either weekly payers or quarterly payers. And CHEPI, here's another one. JP Morgan Equity Premium Income Fund. I'm sitting at 6 shares and I'm slowly building this one out. 22% of this portfolio, $58.01 at an average cost. And now right now sitting at $59.13, positive 1.93%. Total return $6.99. I can't complain. And they also pay a dividend. And I believe JEPI pays weekly. Dividend, yep. February 4th, I got $2.14. And prior to that, January 5th, I got 92 cents. So slowly but surely compounding, and it's paying weekly dividends. So I'm cool with that. Not going to complain. VXUS, an international fund. Wish I got in earlier, but I'm going to slowly build this one now. Sitting at 3 shares at an average cost of $76.84, positive 7% return. 7.63%, as a matter of fact, total $17.89. This also pays me, and it's an international fund, which I like that. I wanted to be in the global market and place myself in a position outside of the U.S. So when the U.S. shares or market is acting crazy, international is usually stable. Or when international is kind of crazy, which they're not as volatile as the U.S., so they're usually stable. As you can see, this portfolio, all you see is green. Then SCHH, which is ETF related to real estate. I wanted to get into the real estate sector and help balance out this portfolio because it has tech, it has international, it has ETF, it has dividends, and it has growth stocks. So why not get into a REIT? You see what I'm saying? Schwab REIT, US REIT ETF. I've got an average cost of $21. It's currently sitting at 5 shares, and it's currently sitting at $22.10. That's a positive 4.77%. That's $5.11. And this is also a weekly payer, and it's 100% real estate. And right now, real estate is, but it's steady. It's not going down. It's steady. It's slowly moving up. And I like that. And lastly, this is a stock. If you watch my earlier videos, you know I had over $3,000 worth of stocks in this share, XLE, energy sector. I sold my entire position when it hit about 80 something dollars, almost 90 something dollars. Hit like 80 something dollars. I said, you know what? Let me cash out. I cashed out. Good thing I cashed out. Because as soon as I cashed out, it dropped, and now it's sitting around 50 something dollars. So I made a lot of money off this stock, and this was in my traditional account. So I said, you know what, for tax purposes, and I feel like I may build this one out like I'm doing ET for the long term. And this one's a good ETF dividend payer, and it pays quarterly. And I'm sitting at 2 shares right now. I bought at $46, which I should have bought at least 10. And it's already sitting at $53.70. And this is part of the energy field. So I already know, what's going on in the energy field with everything that's going on with gas, oil, and these computer systems. Where do you think all that energy going to come from? It's going to come from these types of companies. And this is why I got ET, Energy Transfer, in my other portfolio that you saw. I got over 170 something shares. It's paying me 50 something bucks quarterly right now. And I'm going to double that soon. So I like this one too. Like I said, I had a whole bunch of this and I sold it at a profit. And I don't regret that because right now I'm buying it at a discount. So I'm cool with that. And I think that's all I got for y'all. So this portfolio is doing really good right now. I'm happy with this one. Sitting at for year to date 7.28%. That's $114.92 up. All in all, $98.43, 6.17. So year to date we moving, and my traditional account is gonna bounce back. I don't consider it like bad. The majority of that is from crypto. Look, year to date, negative 6.34%, total $991.38. Now we're going to go to crypto. Crypto, year to date, 29% of my portfolio being down. 500, that means $574 right now, $575, right? Crypto negative. And my total negative is like 900 and some change. That means majority of it is single-handedly coming from crypto. So crypto, wake up, man. Wake up, man. I need you to do better. And then my stocks, we just going to keep building out. I'm not really into looking at different positions to really get into right now. I got tech. I got growth stocks. I got ETFs. I got Netflix. I'm just chilling unless I see an opportunity out there. I'm not really looking to go crazy. I'm just going to dollar cost average and put money into these stocks and possibly put some more money into crypto just to lower my cost average on some of these plays. And hopefully when they become profitable again, I'm going to sell and put that money back into a more safer vehicle, which is the stock market. I like stocks better than crypto. Although I made a little bit money on Dogecoin and meme coins, I'm not into that anymore at all. For me, it was gambling. And even right now, I feel like it's gambling in a sense, even though, I believe in XRP, Bitcoin, and I think Ethereum and Sol, they have their place in the crypto market. But I'm going to stay away from crypto until I learn more about it. And not saying I won't invest into it anymore. I just won't invest into any new positions. And if Solana or Ethereum balance itself up or become profitable for me, I'll take my money elsewhere. So it's Stocks and Stoves with Dad. Peace and love. I hope you like, subscribe, send the links to your friends, share it with people. I'm just a young man trying to come up with a master plan for on the road to financial freedom. And I think this vehicle, the stock market's one of the best vehicles to help me get there, besides working hard and putting in extra hours and just working and hustling and working and hustling. I'm like investing in me, educating myself, learning, studying, reading books, watching videos, and doing all of those good things. So, and then taking care of your mind and your body and the foods you eat and the things that you do in life. So y'all go ahead and like, subscribe, post some comments. Tell me what you think. And let me know how your portfolio doing. Peace and love. Stocks and Stoves with Dad.